to...
Thank you, Yvonne. I am Cavin Teo, the head of ESG at Lion Global Investors. You may have heard of ESG, but some of you may not know what exactly it is and why you as an investor cannot choose to ignore it. ESG is essentially an acronym. It stands for Environmental, Social, and Governance. Taken loosely, ESG investing, sustainable investing, and socially responsible investing are one and the same. Historically, investment decisions have often been made, but mainly based on financial factors. However, in recent years, there is a growing emphasis on non-financial factors as well to ensure that the environment, society, and minority shareholders are protected too. So in a nutshell, ESG is a good thing, and it is something that we should all keep in mind. The key idea is to invest in companies with sustainable business practices or are progressing towards being sustainable. This would also lead to a better and more sustainable future for our society. Now, let's take a look deeper into what ESG stands for in ESG investing. Let's start with E, or environment. It includes considering factors such as climate change risk and carbon emission, resource depletion, clean water, energy efficiency, waste and pollution, recycling, and deforestation, just to name a few factors. S, or social, can include considerations like working conditions, child labor, slavery, the impact of a company's business on local communities, health and safety issues, human rights and human capital development, corporate diversity and inclusion, etc. And finally, G, or governance, may take into account shareholders' rights, voting procedures, board independence and board diversity, corporate transparency, executive compensation, and corruption. What is heartening is that more and more companies are embracing ESG and making business decisions based on them. This is because of tightening regulations, and the companies recognize that they must play their part in improving the world and ensuring a more sustainable future for our society in order to have a sustainable business. There is also a growing realization that more and more global fund managers who control billions and even trillions of dollars in money will shun companies that do not embrace ESG and could favor a company that capitalizes on ESG opportunities. In the past few years, we have seen an exponential increase in ESG investments. For instance, according to Morningstar, the total assets of funds which has an ESG focus has increased phenomenally from US $500 billion in early 2019 to US $2.7 trillion in early 2022. Clearly, ESG is a theme that investors cannot ignore and should not ignore. ESG sounds good as a concept, but how would one systematically incorporate ESG factors in the investment process? Global financial data providers offer ESG securities ratings and benchmarks to screen good ESG names from the bad ones. This has helped to improve and expand investors' ability to integrate ESG into their investment process. Now, clearly, the transition to a more environmentally friendly, climate resilient, and socially responsible global economy will introduce new opportunities for investment and growth. Companies that adapt successfully to this transition are increasingly likely to benefit from evolving consumer preferences and regulations. In a nutshell, investors cannot choose to ignore ESG. It could be part of your overall investment portfolio and something you invest for the long term. ESG is a game changer. It is not only going to change the way we and our children live, but also the way fund managers invest their money. I hope you have found my short presentation about ESG useful. To find out more, do speak to your relationship managers to explore further about ESG and how you can invest in this mega theme. There are investment options available. Let me conclude by thanking you for your time in listening to my presentation. I wish you all a very happy and prosperous 2023.